Well, what are we doing here on a Thursday night, guys? Welcome, everybody. We got about 4 minutes left, kind of a really special webinar. You've probably seen all the posts on Facebook. How did I get Sandy Botkin on a webinar? And if you don't know him, he's the rock star in his industry, and we're kind of like we get the top guys now. I guess we've gotten a little bit of attention, so we're pretty excited about that. So we got about 4 minutes left. We're going to kick this off in about 4 minutes. Really thorough stuff, guys. Go ahead and let me know where you're calling in from. Let me know who's on here from international, please. All over the world, I want to hear from you guys. Joey, San Antonio, Miami, Pamela, Michigan, Dallas, Texas, Maui, Red Bluff, California, Edmonton, Canada, Iowa, Atlanta, Miami, Indiana, San Jose, UK, going way too fast, Vancouver, Mexico, Detroit, Michigan. Wow, it's going crazy. Kentucky, Colorado, Los Angeles, Florida, Australia is on. Welcome, Australia, Texas, New Jersey, Minnesota. I just saw Europe, Alberta, Canada, San Antonio, Texas, DeLand, Florida, Georgia, Ottawa, Canada. Canada is representing on here today in the nice sunny nation of Canada. I grew up in Nova Scotia, so I'm glad to do that. Terry, London, UK, thanks for staying up. It is midnight there, my friend, right? Just about midnight. Boston, Mass, welcome. Judy in Tampa, welcome. Branson, Missouri, on vacation. Awesome. Ooh, it's crazy in here, guys. As usual, we're going to max out, and then they're going to get mad at me because they maxed out. Then they're going to suggest another webinar type of platform, and I'll just kind of snicker. Doing my best. Gray Shoes from Alberta, Canada, welcome. Edmond, Oklahoma, welcome. Kansas City, welcome. Gerald Cuff, welcome to the call. New York, Edmond, Oklahoma. Tina from Atlanta, welcome. Pamela from Delaware. Jeff, Westminster, Colorado. No welcome for me, says Roberto Varela. That's correct. You are not welcome. Just kidding. Mary Jane, Texas. Auburn, Georgia, welcome. Felt like I just did this last night. Crazy. Guys, we got about 2 minutes left. I'm going to ask you a question before I bring this gentleman out here, because he's spoken to a lot of companies, and when I'm talking to the event coordinator for Vegas and we're talking about numbers, I have to say things like you just don't understand this company. Because, you know, in the broad strokes of the industry, there's a lot of taboo things and things like that out here, so we're just different. So while Sandy's looking at this chat box, I would like you to tell me right now if you've made any money with DS Domination. Go ahead and put that in there, and let's blow them away. Go ahead, yeses, or put in how much you made and how you're doing, everything else. Yes, dollar sign, swears yes. It's going too fast. $97 today, $5,200, $2,500, $400 plus, $3,500, $350. I should get a screenshot of this. $1,500 since starting. Yes, $600 to $800 a month, $1,000 a month, $1,200 plus a month, $8,000 profits, 5 months, thousands, $2,000, $3,500, $500, $2 grand, $5,600 per month, 5 weeks, made a bunch of money, $1,600, $3,500, 30 days, $100 today, $485, $600, $4,250, $800 plus. That's profit, $2,000, $3,000, $500 DSD, over $3,000 on eBay, $600, $125 this month, $2,400 last month, $330 in 10 days, $600. $300, $555, $500 just got started, $666, $375 today, $1,800 1 week, $26,000 dollars in sales per month, $500 per month, $130 today, $3,000 in sales last 24 hours, $6,000, yes, $6,000 last 60 days, $313.41, $1,500 just today, $15,000 total, $8,000 first 90 days. They've never seen anything like this, guys. All right, it's 7 o'clock. The comments just keep rolling in. I'm sure Sandy just realized he's looking at a different animal right now. But here's what I want to do. I want to introduce the guest speaker tonight, the all-star in the industry. And if you've seen any of the Facebook posts, if you don't know him, and people were like, how did you get it? Wow, Sandy Botkin's on here. I can't believe it. That's amazing. Here's why people are celebrating and pretty excited. Sandy's a certified CPA. He's a tax attorney. He's trained IRS agents. He's spoken alongside the likes of Mr. Donald Trump, if you've heard of him, Tony Robbins, if you've heard of him, authored best-selling books, Lower Your Taxes, Big Time, Achieve Financial Freedom, many more. I could go over his books the whole call. Frequently speaks as the tax expert on NBC, ABC, Fox, CNN, basically every channel you got, except for HBO maybe. Here's the deal. Here's why he's here. Here's the answer to the pressing question of how did you get Sandy? After all this, after a stellar career, and he's still rocking on, his passion is about small business. Now, some of us are still small business. Some of us are really big business, but you know, as we grow here, there's a lot of small business owners already, and it's absolutely crazy. So since he's so passionate about small business and he just saw what you guys posted, I want to introduce to you my pleasure to bring out here for you. You guys asked and we answered, although slow, Mr. Sandy Botkin. Sandy, are you here? You might be muted, Sandy. Sandy, talk to me. I can see your mouse moving around, Sandy. I can't hear you. One second, Sandy. I got you here. Connected to audio. Sandy, I'm going to make myself the presenter, and then I'm going to throw it back to you, okay? Can you guys hear Sandy? Sandy, we cannot hear you. Scott, are you on here? Scott, can you hear me?
I'm on.
We don't have Sandy. Okay.
I'll call him on his cell phone.
Okay. One moment. I am not redoing that introduction. I'm still here, guys. Sandy's assistant's calling him. Sandy, do I have you? I can hear you faintly now. Bear with me, guys. Hey, Scott, I got Sandy dialing in on a phone. Does he need a PIN app or anything like that?
(914)
Hey, Sandy.
Oh, no, that's not enough numbers. Okay, give me.
Hey, Sandy. Sandy.
Yeah.
I got you.
Oh, you got me.
Yeah.
Okay.
You're live.
I'm
Here
live.
we go.
Oh, okay. Boy, I don't know. I keep getting this. You have so many people on the line that I keep getting this button that says the webinar has reached its maximum attendees, and it keeps popping up and down. Okay, as long as you can hear me. That's interesting.
Okay. I think you want me to do that. You want me to do that introduction again? Is that what you're trying to pull off here?
No, I think we're fine. You did a great job. Thank you. I'm so sorry for the mix-up here, guys. There must be some technical difficulties here. Anyway, welcome. I'm glad everybody can hear me. That's nice. I got to tell you how incredibly honored I am to be speaking with you guys. And I'm not only honored to be speaking for DS Domination, but I'm very honored to be speaking to you, self-employed people. I mean, heck, my parents were self-employed. I'm self-employed. So I really admire people that have, that entrepreneurial mentality, take a little risk in order to make a lot of money. Now, I'm going to be going through the material very quickly. There's a lot of things here, and this is sort of a 30,000-foot overview of what's in my videos and my books and so on. So you're going to want to take some notes. You want to get a pen and paper because I am really going to move. And I'm going to be asking you some questions. And I'm also going to be covering some surprising, and I think some shocking things for you. Now, the first surprising thing is you ever have a situation where you charge something on a credit card and you found out the charge was more than you expected, or maybe you were charged for something you didn't even buy. You ever have that happen to you? Happened to me. I had dinner with my wife, and I got a bill for about 80 bucks. I got home. Yeah, the bill was 80 bucks to the credit card, except I was charged twice for the exact same bill. I was irate. I was immediately on that credit card company line, and I immediately demanded a refund. Now, my question to you is, when that happened to you, how did you feel? Did you just let it go? Or did you demand a refund like I did? And how did you feel about it? Well, I want you to hold on to that feeling because I'm about to make it a lot worse. What if I were to tell you that as professionals, you are overpaying your taxes to the tune of thousands, and I intend to prove it? Okay? Would you want to know? Because that's exactly what I'm going to do today. In fact, one interesting thing about taxes is you're going to spend more on taxes than you're going to spend on food. See if we can get this to move here. Housing, transportation, and clothing combined. But there's a good news. I'm going to show you an easy solution where you won't have to worry about this, where you have that peace of mind of increasing your deductions at the same time reducing your chance of audit. When I say that, a lot of people are very surprised, but that's exactly what you'll get. Now, a little background about me, because I'm going to be covering some, I think, shocking things, and I think I need to cover, who I am and why I'm qualified to teach you this stuff. Number one, I keep getting this little box that keeps popping up. I'm a CPA. I'm a tax attorney. I'm also a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me head rodent. I've been lecturing for over a quarter of a century on tax and financial issues. I'm a best-selling author of a book called Lower Your Taxes Big Time, which I recommend to everyone. And I have another book that I just came out with that's garnering some terrific reviews called Achieve Financial Freedom Big Time. And both books, Lower Your Taxes and Achieve Financial Freedom Big Time, are available on Amazon, Barnes & Noble, and all the other places. You probably get on eBay since you guys deal with that. And I've been on a lot of media, from Fox, CNN, CBS, and so on. And I'm not saying this to impress you. I just want you to know that I know what I'm talking about. Now, I'm going to be talking about some very surprising things and some shocking things. And here's the first thing. First of all, there was a study done by Harvard. And they wanted to know, it was about a 12-year-old study, what percentage of people can retire with the same standard of living they had before retirement? The answer was really surprising. The answer was 4%, which means 96% of all people in this country and Canada have to either continue working, live on some form of charity, or reduce their standard of living. And what's interesting is that this study was about 12 years old when companies gave out pensions. I was reading somewhere that the average company today, only 20% of them give out pensions. So this number is actually high compared to what it's going to be. Well, the good news is we're going to get you to that 4%, I promise you. Now, how are we going to change that? Very simply. We're going to be talking about some amazing tax breaks, and we're going to be talking about the types of records you need so you never have to worry about IRS or Canada Revenue Agents audit again, or any other company you're with, any country you're with. In many cases, we'll show you how to bulletproof those records from even the smartest auditor. I have found in my 30 years of lecturing, there's a current tax dilemma. People either are not taking all the deductions that they're entitled to, or they're taking more in deductions, but they don't have the right documentation. It's always one of those two in probably 99% of the cases. Well, the good news, we're going to correct that problem. And by the way, being self-employed, you have as much as a 700% more likely chance of being audited. So having the right documentation is not something nice to have. It's really a necessity because you really are on the target list as self-employed individuals. But the good news is by doing it right, you won't have to worry. They won't get anything out of you. How's that for peace of mind? Now, in both U.S. and Canada, you are guilty until you prove your innocence. And I'm going to say something that's going to sound kind of funny, but the government is the biggest bookie in North America because they're betting on you to survive, to survive and thrive big time in your business. And the reason the government bets on you is very simple. They've learned that from little acorns come big trees. For example, Apple Computer didn't start with 200,000 employees. It started out of Steve Wozniak and Steve Jobs' garage. Amazon, the big internet marketing guru, didn't start big. It started out of his garage, Jeff Bezos' garage, I believe. Mattel started small. Even Microsoft just started small. So the government knows that by passing good tax laws for small business, and there are good tax laws, they are subsidizing the job growth in North America. And there's a lot of people betting on you, from the government to the company. And if you don't realize that, then you're basically betting against your own success. Now, what's interesting is that we have two tax systems in North America. And I don't care if you're in the U.S. or Canada, there's two tax systems. One is to make you rich, and one is to take your wealth. The one to take your wealth is the one designed for employees and for those who don't know the rules. Because if you are an employee or you don't know the rules, you are taxed on $1. You don't get that many deductions despite what you think, and if you do get an employee business expense, it's got to exceed a certain threshold. However, if you know the rules and you are self-employed, well, that's the one to make you rich. Because there you take all the deductions before the government gets one dime to drink. You don't have any threshold you have to exceed. You can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. You can set up a pension plan that makes any government plan look small by comparison. The tax benefits of being in business are enormous. But again, you got to know the rules. And these rules will generate deductions, which will create cash that you never have to pay back for your business. I want you to think about this for a minute. Imagine you have a terrific set of tax laws that are giving you interest-free financing that you never have to pay back. And that's what a deduction really is. And a good example is Mary. Mary is an individual who has the following expenses. And she's an employee, and if she happens to be self-employed, she doesn't know the rules, she comes under the employees because she doesn't know the rules. First of all, she has a cell phone. Now, a cell phone is normally not deductible as an employee. She has mortgage interest. In Canada, you can't deduct the interest. We can as an itemized deduction. She pays rent. It's not deductible in U.S. or Canada. She has car expenses. She drives to the office. She spends money on gas, repairs, insurance. Not deductible. She goes out to restaurants. She likes to eat out a lot. Not deductible as an employee. She likes to entertain. She spends money on movies and golf. Not deductible. She has medical expenses, which have to exceed a high threshold. In fact, here in the United States, it's even higher than it was in prior years as a result of Obamacare. And she has other expenses that have to exceed a high threshold. But here's my point. By knowing what you're doing and being self-employed, now portions of these expenses become deductible. We call this redirected tax dollars. Here's my point. Let's say that you're making $8,000 in income, net income, or $10,000. Wouldn't you rather, instead of giving that money to the government, IRS or Canada Revenue Agency, wouldn't you rather take a portion of that money and use it to subsidize your business? Which do you think is the wiser choice? Because, and I want to emphasize that point, I picked my words very carefully, it is a choice. With proper tax planning, you can take a good portion of the money that you're already paying the government and use that to subsidize your business. That's the bottom line. And that's why maybe millions of money-smart people are starting home-based businesses. And by the way, here's something that's very shocking. Who are the biggest tax cheats in North America? I bet you never guess. The number one top tax cheats in North America are business owners themselves. They cheat themselves out of billions of dollars due to lack of knowledge and procrastination. In fact, there's basically three reasons that I'll get into. And, you know, it's interesting that, once to the next slide. I did a study, and I estimate that small business owners overpay their taxes to the tune of about $150 billion. It's $1 billion a year. And we're talking billions. And even worse, over 90, let me back up for a moment, over 95% didn't think they overpaid. Now, why is this happening? There's three reasons. One, you don't know what you don't know. Lack of knowledge is an absolute killer for people in dollars. And you're going to learn a number of things today that I bet you didn't know. Number two, and the sad part is I'm only covering about 2% of what's available to you. Number two is procrastination. You know, it's like an alarm clock. If you don't have something triggering you to wake you up, what happens? You don't get up. Same thing is true with tax laws. There's certain documentation you need for entertainment, for travel, for car. If you don't have something triggering you to do the right things, you end up not doing it. And the third reason is fear of the IRS or fear of Canada Revenue Agency. And that really shouldn't be either, because if you know what you're doing, you won't have to worry about the fear because your records will be perfect. And that's what we're going to get into today. Now, there's a couple of cash drain myths that causes more people to lose money than virtually any financial mistake you ever make. And there's one myth, and I'm going to cover a couple of them, but there's one myth that's only 7 words long. And yet, as I said, it causes more people to lose money than any single financial mistake. And those 7 words are, my accountant takes care of my taxes. By the way, I have a similar myth. My spouse takes care of my taxes. If you learn anything, learn this. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? Wouldn't that be nice? Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. The point is, accountants are essential. In fact, I'm going to tell you something I bet you didn't know. If you do your own tax return, IRS and Canada Revenue Agency did a study, and they find that people who do their own tax return have over twice the error rate of those used by a professional accountant. Twice the error rate. Now, if they know you have twice the error rate, what does that mean? You've increased your chance of an audit. That's simple. And who represents you? The box? I mean, I'm a tax lawyer. I don't even do my own tax return. So accountants, in my opinion, are absolutely essential. But the problem is, if you don't have the right documentation, if you don't know what to do, there's only so much they can do for you. It's got to be a partnership effort. Now, I've had somebody, I did some of these big mega events, some of you may have seen me with these famous people, and I had a guy come up to me and said, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. I get a refund every year. He actually said that to me. I couldn't believe my eyes. I couldn't believe my ears. So what I did is I actually ran the numbers. I wanted to know how much are people really paying in taxes. And I said, okay, let's assume somebody who's making $50,000 a year of net taxable income, net of all the deductions and exemptions and so on. How much do they pay? And I picked an average state. If you're in a province, it's probably a little bit more than this in Canada, but it's pretty close. Someone who makes $50,000 a year of net taxable income pays roughly $12,917 in taxes. Now, normally, estimated tax and withholding is more. Why? Because the government wants to make sure they get their money. But two, by having it more, you're getting a refund, and don't you feel better when you get a refund, don't you? So even though this person's getting a $1,568 refund, they're still leaving some money with the government. In this example, they're leaving $12,917. This translates to 25.8% of their net taxable income is being paid out in taxes. And again, I'm not talking about Donald Trump. I'm not talking about Roger. I'm not talking about, people doing well. I'm talking about a hardworking single individual making $50,000 a year of net taxable income. Somebody makes $100,000 a year, pays 32.4% of what they make in taxes, and somebody who makes $250,000 a year pays a whopping 37.7% of what they make in taxes. So let me tell you, you are paying a lot of money in taxes. Whether you realize it or not, you are. And it's a big item. Now here's another big myth. Okay, I got a home-based business. I'm working on the internet. I facilitate sales on eBay. What kind of deductions can I get? What kind of fringe benefits can I get compared to, say, a Fortune 500 company or a brick-and-mortar company? And here's the answer. You get exactly the same tax advantages, back up for a moment here, as a Fortune 500 company can provide for their employees. The exact same ones. I have a book called Lower Your Taxes Big Time, and in that book I have 130 pages of fringe benefits. And I would bet at least 128 of those pages, and I think all of them, apply to everybody on this line. You get the same benefits, same deductions. Now, here's another interesting myth. I'm only working my business part-time. What kind of deductions can I get? The answer, you get the exact same benefits, same deductions, same fringe benefits as a full-time worker. You do not have to work, whether it's full-time or part-time, it's the same thing. Now, here's another big myth. What if I'm not making any money yet? And I get this a lot. Well, why do I have to worry about taxes? I'm not making that much money yet. I'm only making $500 a month, $1,000 a month. I'm losing money. First of all, the amount of money you make is immaterial for tax planning to benefit you. In fact, I'd like you to write that down. The amount of money you make is immaterial for tax planning to benefit you. I can't tell you how many people come up to me and think, I got to make $100 or $200 or $300,000 to benefit from tax planning. That is so wrong. Remember I said the government is the biggest bookie, and they subsidize you to build your business, and they subsidize you in 3 ways. The first way is that if your business generates a loss, that loss can be used against any form of income you have. Interest, dividends, wages, pensions, rents, anything. So let's take an example. Let's say you make $50,000 a year in a job, or your spouse earns $50,000 a year in a job in the U.S., and your internet business generates, or your marketing business generates a $10,000 loss. You only pay taxes on $40,000, the net. Now let's say that loss exceeds your whole income for the year. Here's the second way they subsidize you in both U.S. and Canada. You can carry back all business losses in the United States 2 years and get a refund from the federal and state government for the last 2 years of taxes that you pay. You actually get a check. For you Canadians, by the way, you get to carry things back 3 years. You actually get a better deal. And even if you carry it all back and use up all your losses, you can carry forward all business losses in U.S. and Canada up to 20 years and offset the next 20 years of earnings. So you never lose a properly documented business deduction. All the government cares about is you're trying to make money. You're working your business like a business and not like a hobby. That's all they care about. And that's why the amount of income you make is immaterial. Because if it generates a loss, you can use that loss against any form of income you have. You can carry it back or carry it forward. Please remember that. Now, here's another question. Let's say I gave you a choice between getting a $17,000 raise every year for the next 10 years. You actually get a check. Or I somehow wave my magic wand and wipe out $10,000 in taxes every year for the next 10 years. Which would you take? Believe it or not, if you pick the 17, you'd be wrong. Why? Because by the time you pay federal, state, and Social Security and Medicare, or in Canada, federal, provincial, and CPP, you're left with less than $10,000, believe it or not. In fact, I'll give you an interesting fact. $18,000 in deductions, if you're in the 40% bracket, produces, if you take what the tax effects are of $18,000 of deductions in the 40% bracket, you will have the same after-tax money as somebody who gets a $1,000 a month raise after tax. Same thing. You run the numbers, you'll find that's the case. So you should be very happy, because that's what I'm about to give you at least. Now, I think I paid $3.49 a gallon for gas. How would you like to get the equivalent of free gas? Would you like to? You know, by writing off your car, that's effectively what's happening. There are, in U.S., 2 ways to write off a car. In Canada, you have 1. In the U.S., you can use either the IRS mileage rates, which is the more conservative approach, or you can use the actual method. Canada, it's just actual. Now, I'm going to start off with the IRS method, which is the more conservative approach. In the United States, IRS gives you, and these are 2014 numbers, by the way, I'm giving you the latest numbers, 56 cents a mile for every mile you drive for business. And by the way, who determines how many miles, whether it be U.S. or Canada or Australia or England, who determines how many miles for business? We do, not the government. And we do this from a tax tracker or tax organizer, and I'll get into that. In the United States, they give you 23.5 cents a mile for medical and moving. So every time you go to the doctor, every time you go to a dentist, round trip, you should be claiming 23.5 cents a mile. If you're not, you're overpaying your taxes. And they give you, in the United States, 14 cents a mile for charity, and there's a lot of people missing this. For example, I have a friend of mine who's on his board of directors of his alumni association. He should be claiming 14 cents a mile every time he goes to a meeting. You think he's doing it? No. In my neighborhood, they have moms drive their daughters to sell Girl Scout cookies. The reason I know that is they come to my house because I like Samoas. You think most moms should be claiming 14 cents a mile for driving their daughters around? You think they're doing it? No. They're overpaying their taxes. Now, that's the IRS method. The IRS is the more conservative approach. That's why I'm using this here. Now, how do you get gas for the equivalent of free? Let's say tomorrow you drive 20 miles for business. IRS gives you 56 cents a mile or $11.20 deduction. Now, a deduction, no matter what the country is not cash. The amount of cash that you get from a deduction is whatever tax bracket you're in times the deduction. And tax bracket, I want to mention what that is because I think a lot of people get confused about it. Tax bracket is not what you pay overall. That's not the case. Tax bracket is what you pay on the last dollar you make to the federal and state government or federal and provincial governments. And if you get a deduction, it's what percentage of that deduction comes back as a refund. That's why we always want deductions. And there's an old song that we CPAs sing. You don't want to hear me sing, but the words are great. Everything is cheaper if you get a deduction. Cha-cha-cha. So let's take an example. The average person in North America is in the 33% tax bracket. I will tell you that this could be as high as 54, but the average is 33. Well, if you multiply 33 by $11.20 deduction, that results in a physical cash savings of $3.69. Here's my point. If gas is $3.50 a gallon and you get 20 miles to the gallon, aren't you in effect making 19 cents a gallon by writing off your car? And that's the IRS method, which is the more conservative method. In most countries, like Canada, for example, you get the actual method. Now, what is the actual? That's a percentage of your automobile usage, or the percentage of each individual item for business. So the percentage of gas, oil, insurance, wash, wax, depreciation. So, for example, let's say you use your car 40,000 miles total, of which 20,000 miles are for business, then 50% of all of these items are deductible. Now, I do want to mention something, especially for those of you on the United States. The IRS method is in lieu of gas, oil, insurance, wash, wax, depreciation. However, there are two things you get in addition to this. You get sales tax, and you can deduct interest on car loans to the extent you use your car for business. So let's say you use your car 80% for business, 80% of the sales tax is deductible, 80% of the interest is deductible, and so on. Many accountants didn't know this, particularly those of you who use the IRS method. So I want you to check your tax return to make sure your accountant gave you the percentage of the interest and taxes. If not, you can file amended tax returns for up to 3 years you've been in business. I know someone who's getting back over $6,000 from the government this way. Now, what kinds of documentation do you need in both the U.S. and Canada and probably other countries too for your car? Number one, you need an odometer log showing beginning and ending odometer reading for the year. Then you need a mileage journal showing how many miles, or in Canada it'd be kilometers, depending what country you're in, you're driving for each destination. Here's the important point that many people miss. You have to have an explanation of the business purpose for each trip. If you're not doing this, you're overpaying your taxes because your record keeping isn't right, and you're at risk of substantial penalties. Now, here's a hot tip. You know, there's an old saying in Washington, D.C., where there's a will, there's a lawyer. You know, a lot of times people do personal stops. They go take their kids tutoring, which is not deductible, or they go see their mom or their dad, not deductible. So one big tip I can give you is if you're going to do something personal, combine it with business. Ask yourself, do you have a prospect or a client or a potential company that you can represent, sell some products for on the web, for example? By meeting with that company or meeting with that potential prospect or client, now, even though you go see your mom, if they happen to be near your mom, most of that mileage would be deductible. And your mom doesn't have to live near you. Let's say your mom lives in Hawaii or Vancouver. Same type of thing. You can meet with companies or potential prospects for your business, and now a good part of that trip could be deductible. Now, let's see where we are here. There we go. In the United States, there are two winners on write-offs with trucks and cars. If you buy a qualifying truck or a qualifying SUV, you can elect to write off up to $25,000 of the business use of that truck or the business use of the SUV in the United States. So what's a qualifying truck or SUV? One that has a truck chassis and a gross vehicle weight of over 6,000 pounds. Now, how do you know if you have a gross vehicle weight? You open up the driver's door. There's a little door jamb, and in the door jamb is a little metal plate that says gross vehicle weight and net vehicle weight. If the gross vehicle weight is over 6,000 pounds, and you have a truck chassis, you can elect to write off $25,000 of business use. And that's true whether you have a new car or a used, like a new SUV or a used SUV. a new truck or a used truck. So it works with the SUVs and it works with trucks. And it doesn't matter whether you paid for the car cash or you financed the car. You still get that $25,000 write-off for 2014. Now, in both U.S. and Canada, you can deduct up to 50% of your meals and 50% of your entertainment. It's a little different in Australia, by the way. I know there's some Australians on. That's a little different here. Now, but you can write up that 50% for anyone who's a potential prospect in your business. So my question to you is, who are your potential clients? Who are people who can either give you referrals or you can do business with? Are your best friends potential prospects? Sure. How about your adult family members? Sure. How about a next-door neighbor? Absolutely. I've never met two professionals get together and not talk business. And my son also sells a lot of stuff on the internet and through eBay and so on. He's always talking business about that, looking for products and things. That there's a ring he's going to be buying for his fiancée. Just had this conversation. He's always looking for things. So the point is, if almost everyone is a prospect, how can you ever have a non-deductible lunch? You can't. And if you're going out with somebody and you're paying part of that bill, you should be deducting 50% of that. And if you're not, you are overpaying your taxes. You're leaving money on the table. And you don't have to pay for them. You can pay for your share of the bill. Now, what kinds of documentation do you need? You got to have something triggering you like an alarm clock to write down in a tax tracker or tax organizer the 4 W's and an H. Who? What's their name? What was discussed? You want to be specific. Ask for referrals. Talked about a specific product. Talked about the benefits of marketing on eBay, for example. Where? Went to Chili's or Outback Steakhouse or in Canada, Tim Hortons. When? What was the date? And how much? By doing this, you will never have to worry about an IRS audit again or a Canada Revenue Agent audit again. Same rules in U.S. and Canada, probably most other countries. Again, you got to have something triggering you to do this. That's the key. Now, I want to mention one thing. I have a lot of people who ask me, they say, wait a minute, Mr. Botkin, if I do all this entertainment, won't this trigger an audit? First of all, I want to emphasize something here. You probably see a lot of advertisement on Super Bowl and Olympics. And these companies pay a lot of money. I think you'll agree with me that they know that not everybody who watches their ad is going to buy their product. Your form of advertising is viral marketing or word-of-mouth advertising. Small business doesn't go on as an advertise on the Olympics. So you're by entertaining. This is the way you advertise. And basically it pays to entertain for two reasons. One, you're promoting your business in pursuit of a profit. And two, you're offering proof that you are running your business like a business. So entertaining is encouraged by both the Internal Revenue Code here in the United States and the Parliamentary Code up in Canada. And it's also true in most other countries. I know Australia is more limited, but in other countries it is allowed. Now, in both U.S. and Canada, there's something called associated entertainment. I bet many of you never heard of that. And I want you to write down the word associated entertainment, put an equal sign, and I want you to write down the word fun. Fun. This is where you're going to a movie. This is where you're going to a play. This is where you're playing golf. You know, golf's an expensive sport. So if you can write that off, you have twice as much fun. Both in the United States and to some extent in Canada, you can write off 50% of your fun as well as 50% of your friend's fun if you talk business in the same 24-hour day as the fun. This is not Sandy Botkin talking. This is the regulations talking. Now, does that give you enough time? So let's take an example. Let's say I go over to Roger's house. I talk business with him. And then an hour later, we drive to a hockey game. Is that talking business within the same 24-hour day? Yes. Let's say Roger and I go out for lunch. We talk business over lunch about the marketing that he has and what he's doing with tax. And then an hour later, we leave lunch. He says, well, Sandy, what do you say we go play golf? I said, all right, I'll go. I might have a 300 handicap, but I'm going. Is that talking business within the same 24-hour day as the lunch? In other words, we have lunch, and then we play golf. Yes. Here's the problem. Who has the burden of proof of showing that we talk business during the same 24-hour day? Do we, or does the government? The answer is we do. And how do we do it? From our tax tracker or tax organizers. Everybody getting the drift here? By the way, for you Canadians, Canada Revenue Agency has announced that you cannot deduct green fees. So green fees are not deductible in Canada. You can in the U.S., you can't in Canada. But you can depreciate golf clubs to the extent they're used for business. You can write off golf balls, caddy fees, things like that. Just not country club dues, things like that. Now, what kinds of entertainment do you need? Well, you need to have the 4 W's and an H. Who, what, where, when, how much. By doing this, you will never have to worry about an audit again. You know, I want to emphasize something here. I'm sure all of you have homeowners insurance. Why? Why do you have that? You don't use it every year. Because if your house burns down or you have a big catastrophe, it's a disaster if you don't have one. You probably all have car insurance. I know you don't use it every year, because if you did, you'd be suspended. Why do you have it? Because you get into an accident. Without it, it's a disaster. This, your tax tracker, is your audit insurance against IRS. It's just as important as homeowners and auto insurance, but it keeps IRS and Canada Revenue Agency off your back. And in addition, it will pay you very, very well. Unlike homeowners, you get paid every single day, every single year with your tracker. And by the way, you'll never get suspended, unlike auto insurance. Now, let's talk about home office, because this is something that almost all of you should be eligible for. I want to mention something. I'll bet you heard that if you claim a home office, that you're going to probably get audited, and it isn't worth it. Did you hear that? First of all, I'm here to tell you that if you don't claim a home office deduction, and you're probably eligible, you are crazy not taking it. And that's true in both U.S. and Canada, and probably most other places. You know, for example, in the United States, in 1999, Congress liberalized the home office rules. Now, my question to you is this. If they didn't want you to take it, why would they liberalize it for you? Okay? Not only that, but there was a long-term study done by a friend of mine who showed that people who claimed home office deductions do not have a higher chance of audit than those who didn't. So to not claim it is just plainly stupid, and you're losing a lot of money. Now, how do we claim a home office deduction, and how do we benefit from it? Let's assume this is a floor plan of your home, and you use one bedroom for your marketing business. And we're going to assume that that bedroom represents 1/8 of the total square feet. Now, I just picked a number here. There's nothing magical about this 1/8. In your house, it could be more, it could be less. But what does this mean? What are the consequences? That means that 1/8 of the utilities become deductible. Before, you couldn't deduct the utilities, but now you can. This is an example of those redirected taxes. You're actually converting money you're already spending and making it deductible. 1/8 of the interest becomes business interest. In the U.S., that means you'll reduce your Social Security and Medicare taxes. In Canada, you can't deduct interest, so here you can deduct part of your interest in Canada. 1/8 of the property taxes become business taxes. 1/8 of the home can be depreciated. Now, this is a big deal in the U.S. This is worth tens of thousands of dollars. Now, for you Canadians, I want to give you a big tip. You may want to write this down. You have one deal that we don't have here in the United States. When you sell your home, you don't pay tax on that home. But if you claim a home office deduction and take depreciation, the portion that you depreciate, you will have to pay tax on. So in this example, 1/8 of that house would be taxable. But you also get a deal in Canada where you can actually elect not to take the depreciation. And in return, all of your home will become fully tax-free, but you can claim all the other deductions for utilities and interest and taxes and so on. So you have that option in Canada. Now, I have a lot of people say, well, wait a minute, Sandy, I don't own my home. I rent an apartment. I rent a home. No problem. In this example, 1/8 of the rent would be deductible, 1/8 of the maid service, 1/8 of the alarm service, of the insurance, repairs. I mean, this is a big deal, and it's worth a lot of money. Now, you have to meet 3 rules in order to claim a home office deduction. Rule 1 is you have to use an exclusive portion of a room for business. Now, when I say exclusive, I'm not kidding. You get those cookbooks out of the bookshelf. And by the way, how do you prove to the government? You know, here you're claiming a home office this year, and now 2 years later, you may have to prove you use an exclusive portion of a room for business. How do you prove that? I bet you didn't hear that from your accountant. Here's how you do it. Take a picture of the home office. Date the photograph. But whatever you do, don't send the photograph in with your tax return. Keep it with your files. When I worked at IRS, somebody sent a photograph in with his tax return, and he was making some undesirable hand and arm gestures. I thought it was very funny. Not everyone at IRS has a sense of humor, okay? Same thing is true with Canada Revenue Agency. So you want to take a picture, you want to put it in a file and store it there, show that it's used exclusively for business. Number 2, you want to use your bedroom or your home regularly for business. And that means at least 45 minutes a day, 4 to 5 days a week. It's much more important that you work your business regularly than, say, once every 2 weeks for 12 hours, for example. And finally, your home has to qualify as your principal place of business in both U.S. and Canada. Now, what does that mean? That means you do the majority of your management or administrative work, which I'm sure you do from your home, and you don't have another office where you do significant administrative work. You meet the 3 tests, which you should be able to do. you can get thousands and thousands of dollars from a home office deduction. I mean, we're talking literally tens of thousands. It's worth that much. Now, a lot of times people ask me, they say, Sandy, I have a daughter who's going to college, or a son's going to college. Can I deduct the college tuition? And the answer is no. All right, my daughter's wedding is coming up. Can I deduct that? No. How about room and board for my kids? No. How about books? No. Despite what I just said, how would you like to be able to get the equivalent of a deduction for every single thing I just said? Would you like that? Would that pay for your hour? You know, I've always said you get one idea in taxes. In fact, not just me, a reviewer said this. It's worth thousands. And here's a good idea for you. There's actually 5 ways to do this. I'm going to give you one out of the 5. And here's the point. Hire your kids in your business. Number 1, you can teach them your business. But number 2, by hiring them, aren't wages, reasonable wages that you pay an assistant to do some necessary tasks in your business, are they deductible? Yes. And if they use that money down the road to pay for their own college, their own wedding, their own room and board, aren't you in effect getting a deduction? It's the same money. But in one case, you went from non-deductible tuition to deductible wages. Now, what are some things kids can do? They can lick envelopes, address envelopes, work on the computer, look for products for you, clean the business office, wash the business car. If you live in Washington, D.C. or Toronto or Ottawa, shred documents, all kinds of fun stuff. Work on your rental properties. I mean, there's all kinds of things they can do. I'll give you an example. My daughter, she majored in digital design, which is sort of like web design with some animation. At the end of 2 years, she was able to start doing internships. Well, I wanted to get a brand new website with a bunch of bells and whistles, and I went to a web company to what it would cost to design something like that. So it was fairly hefty for what I wanted. So I asked my daughter if she do the same thing, and she said yes. So she designed my website and did all the bells and whistles, and I was able to pay her something less than what this web company would have charged me, which made it reasonable. I was able to deduct the equivalent of 2 years of college, 2 years of room and board, 2 years of books. I saved tens of thousands of dollars hiring my daughter. My son Matthew used to work with me on my rental properties. He would mow the lawns, help paint the properties. I would pay him a wage. He then used that money to pay his own tuition. If you are not doing this, if you are not hiring your kids, you are losing thousands and you are overpaying your taxes. Now, all that the government insists on is that you pay them a reasonable wage for what they do. And that's it. Remember what I said. Self-employed people have a dilemma. They're either not taking all the deductions that they're entitled to, or they're taking more deductions. They're not taking all, but they don't have the right documentation. I found that all the time, and I'm sure that applies to just about everybody on this line. Hopefully, I've convinced you to start keeping meticulous records and to learn more about tax deductions, because it is worth thousands. And I can promise you, you're overpaying your taxes. In fact, I'll give you another big tip. IRS and Canada Revenue Agency both ruled that not only is your dry cleaning, when you go to out of town on a convention or out of town on a business meeting where you're sleeping away out of town, not only is if your clothes got soiled there, not only is the dry cleaning and laundry deductible while you're there, but the first dry cleaning bill you incur when you get back home is 100% deductible. And I bet you're not doing it. And if you're not doing that, you are overpaying your taxes. It adds up. And a lot of times people think, well, wait a minute, Sandy, what about credit card statements? Won't they work alone? Well, I want you to think again, because IRS agents and Canada Revenue agents love people who think this way, because you need more information than the credit card provides. Remember, in tax law, you are guilty until you prove you're innocent. You have to prove all your deductions were business related and you are following the rules. That's the bottom line. You know, if you want to get all these great benefits, you've got to document things correctly. Now, you know, the key to getting that redirected taxable income I'm talking about is the government wants 2 rules. They want you to run your business like a business. In other words, they want you to be a good bet. They don't care if you're not making money, believe it or not. All they care about is you're trying to pursue a profit. Now, what does that mean? And I got a whole video on this in my Taxbot thing, but let me give you an example. Number 1, they want you to work your business regularly, and that means at least 45 minutes to an hour a day. It can be more than that, but at least that. You should have an accountant who goes over financial statements. If you're not making money, they should be suggesting where you can cut back. If you don't make money, then you should be contacting experts in the industry, somebody who's doing very well in this business, like Roger and others, to find out what you should be doing differently. That's the whole purpose of what this company is about. If you're not doing that, you're not running like a business. Business people have good documentation, whereas hobbies do not. Again, the government doesn't care if you're making money. I know that sounds strange, but to subsidize you, all they want is you to try to make money and to track your expenses according to both IRS and Canada Revenue Agent standards. It's not asking too much to be able to get all the deductions and all those great subsidies. And remember, you're as much as 700% more likely chance of being audited. So this is not something nice. Having a tax tracker isn't just nice. It's not even great. It's something that's necessary. It's like homeowners insurance, auto insurance. If you don't have one, you're leaving yourself at risk. Here's my point. How would you like to have an accountant or a personal tax assistant 24 hours a day, 7 days a week to do all of this stuff for you? I mean, you're busy marketing, so how would you like to have an accountant to do all this for you? Do your mileage logs for you. Keep all your receipts bulletproof so that even if you have a flood, you won't lose them. Keep all your tax notes and everything for entertainment and travel so you never lose them. Would you like that? And here's my point. Accountants can be expensive. What if you can get one for pennies a day? Seriously. Would that be something you would use? Well, let me introduce you to the best tax assistant you will ever find, and it's called Taxbot. Taxbot is a cute little creature. It has a 4.5-star rating in the tax store. Now, I designed Taxbot to be very simple and easy. I want to emphasize something. I grew up in an era where we had slide rules. We didn't have calculators. We didn't have computers. So one thing I've learned about myself is I can do something if it's simple, easy, and fast. That I can do. So I designed Taxbot for me to be simple, easy, and fast. It has 2 buttons. You can't get less complicated than that. One is to add expenses, and the other is add trip. That's it. So let's take an example. Let's say, by the way, I want to emphasize what this does. Taxbot is for the smartphone, for the Droid, or the Apple, or the Droid tablet, or the iPad. Any of those items. It can even work on the web. The way it works is you snap pictures of receipts, you answer simple questions, and you are insured to be both IRS and Canada Revenue Agency compliant. And I did call the Canada Revenue Agency Rulings Directorate for a ruling, actually. The way Taxbot works, let me give you an example. Let's say I'm going to have lunch with Roger. I would click on Add Expense. For one of the expenses happen to be meals, so I click on meals. And by the way, all of these, you'll see a whole category of expenses. All of these are editable and customizable. So if you want special categories for your business, you can edit it. If you forgot to add something, you can put it on, you can add it. It's all editable. Now, the minute I click on meals, here's the important point. All of the tax questions that IRS or most countries, Canada Revenue Agency, for example, pop up. So that eliminates procrastination. So for what? The business purpose, how much, where, when, who are automatically there. All you do is fill it out and you are bulletproof. In fact, the data is automatically put in for you. You don't have to put it in. There's one other line, and that's called entity. Taxbot works. People ask me, do I need Taxbot for me and then one for my wife, and I have a separate business? Taxbot works on up to 3 different businesses, 3 different cars simultaneously. So you can use Taxbot for you, Taxbot for your spouse, Taxbot for for another business. You can all on one account. It works in both U.S. and Canada. In fact, it works anywhere in the world, actually. It's by satellite. So it'll work anywhere you're at. In addition, it has an integrated camera. One of the problems I'm finding with receipts is they tend to fade. It's a huge problem on an audit. So what Taxbot does, it has an integrated camera where you can take a picture of the receipt, click Save. All the pictures and the documentation goes on the web wirelessly, and it's stored for you on the web. So the point is, if you lose your phone or you buy a new phone, you don't lose your data. It's not on the phone. It'll be stored on the web for you. Now, in addition, Taxbot has a mileage tracker with a GPS system. Now, this one's really good. This is the add mileage. Remember I said there's 2 buttons? So let's say you're going on a trip. You're going to meet with a potential prospect or meet with a company to represent their products or go to a seminar or any other type of a convention, any other type of business meeting. You click on add mileage. The minute you do that, it'll ask you if you want to start the mileage tracking. In fact, that's going to change. It'll be automatic now. We're going to actually make that an automatic thing so you won't even forget to turn it on. What will happen is, as you're driving along, you'll see a pin follow you. The minute you get to your destination, you click on Stop Mileage Tracking. Here's what will happen. The beginning address will automatically be put into your phone. It's automatic. You don't type it. The ending address where you stopped it will automatically be put in your phone. The date is automatically put on your phone. The mileage or kilometers, depending on which country you're in, will automatically be put on your phone. In fact, we'll even do it round trip for you if you want. You can turn that off. All you type in, and you can even do this by dictation if you want, if you have a phone that accepts dictation, is why, the explanation. You then click Save, All of this data goes to the web. It will then be summarized for you and fully downloadable with one press of one button, reports. And then you can send this to your accountant by email. And it will compute your business versus personal mileage percentage. You're not going to get better than that. I mean, it's as simple as it gets. And by the way, if you can forget about those mileage clipboards. And by the way, if you also forget to turn it on, and you won't have that problem because we're changing it so it'll be automatic. But if you somehow forget, or for whatever reason, you can go on the web, you can input the address of where you went from and where you left from. Taxbot will compute the mileage and also show you a graph of the route that you can adjust with your mouse. So it's all editable and customizable. Now also, in the front of Taxbot will show the total deductions in real time. Talk about motivation. I mean, everyone I know in the home-based business, especially network marketing home-based business, every leader I know is getting their downline on this. Why? Because when people are generating $500, $1,000, $1,500 a month, they're never going to quit. That's exactly what happens. I mean, this is a picture of my partner's iPhone. He's generating about $1,800 a month in deductions. I mean, no one's going to quit when this happens. It's just tremendous. Now, Taxbot will also look for missed deductions that you might have charged, or a check that you wrote, and will actually check to see if it's in tax. But if not, it'll ask you if you want to add this to business, so it'll all be in one place. Now, Taxbot is kind of like a BMW. There's more under the hood than it appears. Your data is encrypted in multiple high-security data centers in different locations. In fact, it's in 2 different cities. So you never have to worry about losing your data. You also get tremendous reports. For example, you get a graph on what you're spending on every category, so you can budget, use it as a budget. Everything is downloadable with literally press of one button. You see where it says reports? You click on reports. It's all downloadable to your hard drive, and you can then email the report to your accountant or put it on a memory stick. It's that easy. It also works on multiple devices. I happen to have an iPhone. My wife has a Droid. We can use Taxbot even though it's the same account, on different devices. It doesn't have to be on the same devices. In fact, you can even use it on the iPad or Droid tablet. So you'll be ready for the toughest IRS or Canada Revenue Agents audit. You know, this is tax time, and I get a lot of media calling me up. When most people are looking like this, and I bet you look like this when you do your tax return, this is the way you're going to feel with Taxbot. Literally, you press one button, reports, and that's all you'll have to do, and all your business expenses will be summarized for you. We have found that people can use Taxbot in less than 2 minutes a day. Less than that. That's how fast and easy it is and simple. So those who want a fast and easy, simple solution, this is it. Now, in addition to the expense tracking, in addition to the mileage tracking, in addition to the integrated camera, you get me. Taxbot comes with 40 videos on a whole variety of topics. It also, from tax and financial, not just tax, by the way. It also comes with over 360 blogs. I just wrote one, for example, on the leading scams that are going on in North America. I wrote a blog on how to get in-state tuition for an out-of-state student, how to evaluate nursing homes for parents, asset protection, what you need to do to protect yourself from virtually almost any lawsuits, what types of insurance to look for, and just all kinds of things. There's lots of blogs, and I promise you get one idea, we worth thousands. And there's a whole big information part on Taxbot. Now, by using Taxbot, you will generate more deductions and save thousands and thousands of dollars in taxes. How do I know? Because I'm going to guarantee it. Try Taxbot for 30 days. We will guarantee you will make 20 times what you paid in the first month. You're going to average, by the way, about 80 times. But we guarantee 20 in the first month, or we'll give you all your money back. What's that, 2,000% rate of return? I mean, I don't think you're going to find that. You're not going to beat that with a stick. Our customers love Taxbot. It has a 4.5-star rating in the App Store. You can check out what people say about it. It was just rated #1 in North America by top 10 reviews as the finest expense tracking software in the country. In fact, North America. It has been used by tens of thousands of people. We are recommended by real estate associations across the country, the National Society of Accountants for all their clients, by the New York Stock Exchange billion-dollar companies. Now, normally Taxbot is $19.99 a month, but there's a special discount that was negotiated because of the large number of people with this company. You get it at half price, and this is not something that's going to go up in a few months. This is it. This is what the contract says. You get it at half price. It's only $9.99 a month. And by the way, it's not even $9.99. Why not? Because it's tax deductible. So it only costs you about $5.40 a month after taxes for all of this. What's that, 18 cents a day after tax? I mean, to me, that's a steal of the century. Now, I do want to mention that you can even get a better deal where you can get it for $100 a year and actually save 2 months of Taxbot. And you get the same 30-day unconditional guarantee of 20 times what you paid. To take advantage of this discount, you need to go to www.taxbot.com, taxbot.com, click on Sign Me Up. It's going to ask you for a coupon code. You need to type in the coupon code, or you don't get it for half price forever. You get it, and you type in DSD, okay? DSD. That will give you at 50% off. So you want to taxbot.com, type in DSD. And by the way, for those of you who do this in the next 24 hours, you get an additional benefit. You will get our premium service, which we charge $259 a year for free. And what's our premium service? You get to ask unlimited tax questions with accountants or CPAs, enrolled agents. This includes U.S. and Canada, by the way. We have Canadian accountants who provide this as well. You get our Audit 911 service. So if you get audited, they will advise you what to do if you get audited. They will review, that's not enough, last year's tax return for ways to save in the future to see if you omitted some deductions. And all of their services are backed by a $1 million insurance policy. All of this comes for only $9.99 a month, which is tax deductible. If you still have questions, we're going to be sending you a copy of our ebook after the webinar. So you're going to get all kinds of benefits here. Again, it's only $9.99 a month or $100 a year, and that's fully tax deductible. Just click on Sign Me Up, go to www.taxbot.com. Don't forget the coupon code DSD. If you do it in the first 24 hours, you will get our premium service. And again, you get that 30-day unconditional 20 times what you paid guarantee or your money back. No questions asked. Okay? I don't think there's not much better than this. Hopefully I've convinced you of the horrible mistake of overpaying your taxes, and I apologize to anyone who doesn't get this, because you're going to pay more than everybody else who did. You know, bottom line, folks, is do something. You know, if Taxbot, for whatever reason, is not for you, you know, you want to buy a fireproof safe, waterproof safe, go ahead. And then get something for your mileage that you might like or use, fine. But do something. Hopefully that's my goal. All right, let me turn this back to Roger. We can get some questions answered. If you have any questions, please type them into the chat. I'll take 5 or 10 minutes of questions, and we'll go from there. Roger?
Hey, Sandy, can you hear me okay?
I can.
I'll tell you, that's an emotional roller coaster for me. At first, I was angry most of the webinar because of all the money I appear I've lost. And then, like, really quick, what was the mileage rate for business? Was it 43 cents?
56.
Okay, 56 cents. If you're on here, I want you to write this down or go through this math for me, okay? Let's take 30 days in a month. And let's go 3 miles a day, and we'll round that off to 3.3. We'll call that 100 miles. You get to write off 56 cents. That's $56 you get to write off for owning a home-based business. So if you have 30, 40% tax, you're looking at $20 right there. Your monthly in DS Domination at the basic level is $20 a month. So if you do not own a home-based business, you don't get to write this off. Now, I know how these guys think because I'm the same way. We don't do a heck of a lot of business meetings. So let me ask you this opening question, Sandy. We source things online, so if I'm going, let's say I'm going out, I'm going to go see my mom 3-4 miles down the road, and I swing into a Walmart to go in there and kind of look at some items that I might potentially sell online. Did I just do business?
You sure did, as long as you document it in your tax file or document it in your appointment book. You sure did. If you can show, that's why you went to Walmart. Absolutely.
So there you go. You know, you're not going to have a hotel meeting. I kind of mock those things, you guys know. So you drive a few miles a day, do whatever you're doing, stop in the Walmart, stop in, inspect some items, research some items to sell, and you'll make even more money, get more money back on your taxes than your monthly is in DS Domination. Yes, okay. Next thing, you know, my wife took my daughter to the dentist today, no clue. Girl Scouts has been raging up and down. She was just at Home Depot, no clue. That call and ask unlimited questions is just absolutely crazy for me, okay? So that's nuts. I got some questions that I got here that I grabbed some of the chat box. Let me grab them really quick, 1 sec. I'll
sure.
get back.
By the way, another interesting thing while he's grabbing that, my son likes to go. I remember I told you my son also markets things through eBay, and every now and then he goes to bankruptcy auctions. He buys stuff at bankruptcy auctions, and some of these things he wants for himself, but if he doesn't want it, he then of course sells it on eBay. And every time he goes to a bankruptcy auction, fully tax deductible, all that mileage is deductible. You go to any auction for that matter, fully tax deductible, looking for products anywhere. That's all business mileage. Going to a convention, going to a seminar related to your business, all business mileage.
Well, I love that rolling thing you have on there that shows you how much you deducted. I can get fired up about that. When you're out there making money, it's like, oh, I made this much, but it's how much money you keep, and then you don't consider, how much money you saved as sexy as how much money you made. But that little rolling thing there, I can get in a little competition myself on that and get pretty excited about that deduction. I'll tell you that.
We got people that save 10, 20, 30,000 in deductions, and let me tell you, you want to talk about excited? They get it. They get pumped.
I'm going to be putting that screenshot up for sure once we get going here into the year. So here's some questions that they have out here. I go on, saying this is a pressing question, I go on and I ship a product from Amazon.com to a customer and somewhere else outside of my state, and Amazon charges me tax. Where am I with that? Can I get that back? Do I got to pay tax on top of Amazon paying tax? How does that work?
Okay. First of all, understand something. That's more of a state issue. I'm a federal tax person.
Okay.
But generally, you can deduct any taxes you pay. And if you're just using it as a what's the word I want to use, a conduit, where you're taking the tax and then paying it to the government, then you don't take it into income. You don't take the deduction. It's a conduit. If on the other hand you're paying money and you're not paying it out, then you take a full deduction for any taxes that you end up paying for that on resales.
Full deduction.
So the answer is yes. It would be taken as a deduction, and then you get a deduction when you pay it to the state or wherever it is you pay it to.
Oh, awesome. Now, a lot of people want to know, and I know this is going fast. We got to record it. We're going to bring them back out on Sunday. A little bit more focus on international there. Should you file quarterly? Is there an advantage, disadvantage? Is it something that's forced on you?
Well, the government actually requires you to file quarterly. If you don't do it quarterly, then there will be a penalty, which are non-deductible. Now, a lot of it depends. This penalty is about 7%. A lot of it depends on what you can earn on your money. If you're making 20 or 30% on your money, then pay the 7% penalty. Why not? I mean, you don't go to jail if you don't file quarterly, but there is that penalty, and that's why it is recommended you normally do it.
Excellent. Okay, great. As a U.S. citizen, do we claim sales made on eBay.ca as foreign earned income?
Well, let's put it this way. All income earned by U.S. citizens, no matter where it's earned, is taxable. Doesn't matter whether it's foreign sourced or it's U.S. sourced. It's all taxable in the exact same way as it would be if it was earned in U.S. or not. So it doesn't matter. It's all considered income to you.
Okay, excellent. Next one. Qualifications we need to look for in a CPA, since this involves a home-based business, drop shipping, varying state tax, stuff like that. Can you give us some qualifications?
That's a really, really good question. I actually, in my book, Lower Your Taxes Big Time, which I recommend to everybody, I actually have a whole chapter in my appendix on questions to ask for a CPA. But let me just give you a little overview of things I would look for. Among the things I'd look for is I'd want somebody who has dealt with other customers, other clients similar to you. Someone who has dealt with import-export, or someone who's dealt with selling products on eBay and things like this. You want them to have other clients in the similar type thing. You want to have somebody who does a lot of specialization in taxes. You don't want to go to an insurance guy, for example. You want either a CPA or an enrolled agent. That's somebody who passes a tough exam with the IRS, or an attorney, or someone who's a former IRS agent. Any of those four, I would say. You want someone who's honest. You want someone who's aggressive. You want them to be able to do tax planning for you. If they just simply take your data and massage it, that's not good enough. I want them to do tax planning and suggest advice. You want somebody who's honest and aggressive. And there's more to it than that, but that's kind of an overview.
Excellent, excellent. Now, I know you could probably spend a night on this question. You don't have the time, so I'll put it a different way. We're talking about tax structures. If your son was doing DS Domination right now, would you want him as a sole proprietor, an LLC? Yeah. I know you can go all night, but
generally I would probably say I'd have to look at the liability exposure. I don't think you have much liability exposure. If you do, then I would be an LLC. If you don't have much liability exposure, and again, I don't know what it is. I have to really get into what you're doing and see what the liability exposure could be. But if you don't have much liability exposure, I would be either a sole proprietor or an LLC. Forget about a corporation for a while. You can always incorporate later. Plus, if when you start your business, or your DS Domination business, if it happens to generate a loss and you're a sole proprietor or an LLC, you can use that loss against any form of income you have. Whereas if you're a corporation, that loss tends to get locked into the corporation. It's much harder to take. So you want to start off either as a sole proprietor or an LLC. You can always incorporate later. You don't have to worry about it.
Oh, great advice. Thank you. Thank you for that.
Well, you want to keep your life simple. That's my attitude.
Yeah, for sure. Now, these guys a lot of them pay monthly, so they've paid DS Domination one-time fees. We're such nice guys. They don't write that off, right?
Are they paying it one time or are they paying it monthly? I'm not quite sure.
There's a mix. There's a monthly and there's a one-time fee.
And what are they paying for? This monthly. What's that for? And the
they're paying for training, ongoing webinars, updates in the back office, things like that.
All right. The monthly should be fully tax deductible. The one-time fee, there's a way to get a deduction, a partial deduction for it. It's called and I'll bet you didn't know. You know this yourself. It's called what's the name for it? It's called a pre-investigation expense. There's a special name for it. And what it is if it's something that's incurred before you actually start the business, you can elect to write off up to $5,000 in the United States as an expense. It's a special election you have to make on your tax return to write off that first one-time thing. Anything above $5,000 has to be amortized in the United States over 15 years. I'm not quite sure how that's treated in Canada, but I do know that that's the way it's treated in the United States. You have to make that special election.
So just to you're nuts. I'll just flat out say that if you're not doing this. You're just the mileage, a few miles a day, pop into the Walmart, whatever. That's covering your monthly in DS Domination. You're getting Monopoly or whatever, something for $500, and you're writing it off according to that. And it's just insanity. Of course, I'm talking about not only the Taxbot, but having a home-based business. So anybody they're few and far between that's ever left DS Domination. It's just kind of silly. But people's choices. And Sandy, what would you wrap this up with? Again, this will be recorded, and we're going to have another presentation Sunday. It'll be a little bit more international, but it'll have the same flair as tonight. What would you add for these guys? Just take massive action?
The bottom line is, there's so much available in Taxbot, especially in the videos and the blogs, that will save you thousands, but you've got to have a home-based business. That's really the bottom line. And by doing that, you will save absolutely thousands and thousands of dollars, and you'll have that peace of mind of not having to worry, what's that worth, about an IRS or Canada Revenue Agent audit again. But the bottom line is do something. Honestly, if Taxbot's not for you, fine. Then buy yourself a waterproof, foolproof safe, fireproof safe, so you never have that problem. Get yourself some system that'll keep track of your mileage, fine. But do something. Don't just roll the dice, because with a 700% more likely chance of being audited, that's not a good move to roll the dice. That's the bottom line.
Excellent. You work with I see why Donald Trump works with you already. You've worked with a lot of successful people, and those people, they took forecasting action. They looked ahead. They didn't hold their arms up in the air and said, why me, right? So it's all about taking action and running your home-based business like a professional.
Absolutely. You work your business like a business, you get paid like a business. You work it like a hobby, you get paid like a hobby.
Amen. I think that's a good place to end. Sandy, how about you?
Sounds good. Let's make everybody's life less taxing.
For sure, guys. Thanks so much for being on here. And Sandy, big shout out to you, and thanks for coming on here. And I'm going to put the high pressure on you to get you in Las Vegas at the end of May, my friend. It took me a little bit to get you on here, so I really appreciate you coming out here. I know there's a million things you can do, and tell you the truth, Sandy saw our success and saw a lot of small businesses making it, which doesn't often happen. So he came out here and wanted to see what was going on. He wanted to support that. And, just one big loving community. And thank you so much for your time, Sandy. And thanks, everybody, for being on this call. It'll be in the back office as soon as possible, and then we're going to do it all over again Sunday, 4 p.m. Eastern. Thanks again, my friend.
Learn how you can create an online income by leveraging two of the largest online stores, Amazon and eBay. Click on the link below and get started today.